Thanks so much for coming to today's Technical Tuesday session. Today is March 19th, 2019. Thank you, Tony, for letting me know it's pretty loud. But what we're going to do is talk about what we're seeing in the markets today, especially for the Euro USD and the US dollar Japanese yen, and help you guys identify some potential high probability trading opportunities that are forming in the market as we speak. And this is something that we wanted to offer for our free members. We just want to give them the chance and the opportunity to sort of get a taste of what we share with our premium members. But let's just move forward and let's just talk about what's happening. But before I begin, good morning, Brandon. Good morning, Alex. Thank you guys for coming. And thank you, for everyone else that's coming as well. But with that said, right now what we're going to do is talk about the fiber or the Euro USD, and we're currently looking at the daily chart. And as you guys can see, last week we saw a nice correction. For the most part, price was pretty much bullish for the week, even though our long-term bias is still bearish. We saw a bullish move, or a nice bullish retracement and correction in price, and the bias to have last week was apparently bullish, and you wanted to look for opportunities to buy Euro USD on dips and pullbacks in price. However, those dips and pullbacks were quite limited, but if you found an opportunity, you were able to get in and take advantage of this slide and push higher. And right now, price is currently testing our daily descending channel resistance. This black line represents a channel, descending channel resistance, and it may find some resistance in this particular area. However, we don't know. Price still appears to be looking bullish on the Euro USD, and we may get a break to the upside. But if you zoom in, you can see that price is also testing the 100-day moving average right here. So then there is some confluence in this area. We have this descending channel resistance, or this descending trend line resistance, and we have this 100-day moving average, and we have this zone of structure that we're going to see when we actually drop down to a smaller time frame. I know Tony said there's no visual. Is it the same way with any of you guys? Do you guys see exactly my desktop and my screen? If not, then there could be an issue. But hopefully you guys are able to see it. I know, yeah, okay. So, yeah, I don't know. It may be an issue on your end. Tony, you may need to log back in. Yeah, you had, okay, yeah, Marie said she had to log in again. Okay, yeah, thanks, Marie, for sharing that. But, okay, yeah, thanks, Alex, for sharing that as well. Yeah, so then, yeah, you may have to log in again into the webinar. Okay, but, yeah, I guess we can move forward and talk about what's happening. But yeah, okay, we have this zone of structure right here that price is currently testing as well. And if you look left, you can see that it coincides with these candles right here. It was a low or support before. What was once support is now functioning as resistance. So then we see this area swapping. It was once a support, and now it's resistance, and these zones and these areas are key areas that you need to identify. But you can see, if you look left, you see these wicks right here, wicks. So then what we need to do is pay attention to any bearish bias around this zone and area right here, or a bearish rotation in price. That's what we need to look for in this particular area. And right now, anything can happen. I mean, we could be still bullish for the Euro USD. But if we do see a nice clean break below this low right here, which I believe is at 13.19, around there, 1.1319, then we could be more confident that the bears are taking control and that we may see a nice bearish rotation in price. So then that's what I'm going to look for. I may see something earlier. and I may enter a sell trade earlier based on some stuff that we share primarily with our premium members. But for the most part, if we do get a break below 1.1319, then we can expect a potential slide lower, and you never know, we can have a nice bearish slide lower all the way down to this channel support. And the reason why I say that is because, remember guys, our overall bias is still bearish. For the past few weeks, we've been talking about this weekly bearish flag that's been forming. What we see right here with this descent lower right here and this consolidation was a bearish flag, and you can see it a little bit better on the weekly time frame. But what we projected is that price could potentially fall and slide all the way down to $1.10, right around this area. So then we still have that bias for the Euro USD, and we're going to continue to have this bearish bias, this long-term bearish bias, until price breaks above this 1400 or $1.14 institutional level. If price breaks above this level and closes above this level or zone, let me just draw that in and isolate that. But if we do get a break above, let's just say 1420, 1400, 1420 zone, if price does break and close above it, then I may want to be extra cautious, and I may change my bias. It depends on what I see. But at the moment, I'm still bearish for the Euro USD, and we'll just see what happens on this pair. If we see some sort of consolidation right around here on a smaller time frame, right at this descending channel resistance, if we see some sort of consolidation, then that could be a clue that price is slowing down, and we may see a reversal in price take place. So only time will tell. We just have to wait and see what happens. We can't force anything to happen. That's one thing you have to understand in trading. You have to let the trade come to you. You can't force anything to happen because we don't know what's going to happen. The only thing we can do is rely on the clues that the market is giving us in order for us to make a trading decision in the market. And once we see those clues, we execute our trade, but we use good risk management at the same time.
Yeah, good morning, everyone. This is me, Marvin. For those that do know me, I'm actually Melvin's brother. But I just want to add to what he just mentioned, because the key to trading is to really understand that there will be a series of if-then statements. And what I mean by that is that if a certain scenario takes place, or if a certain technical sign takes place, that can be our indication that price could be moving in a particular direction. So then what we want to do, we want to analyze what price behavior is doing around key zones of support and resistance. And that's the reason why Melvin identified this area where we do see this confluence here with this descending trend line resistance here. And then we also see this 100-day moving average, that there's a possibility that we may see some type of structural shift up here, and even a sign that price may tumble lower back deeper within this channel. But of course, we have to wait and see. If we do see that technical sign, that sheer technical sign that that's what's taking place, that we're seeing a rotation of conviction and demand back into the US dollar, then of course it'll give us cause to actually trade Euro USD lower. But there's the possibility still that we may see a break above these levels.
Yeah.
So then that's why I'm saying, like, trading is really a series of if-then statements. If we do see conviction remain, dollar short, and what I mean by that is that the US dollar is weakening in comparison to the single currency or to the Euro USD, we'll see a break above this structural level and test this level up here, this zone of institutional level of 1400 here. But so then what I'm saying is that we analyze price behavior, how price responds around these key zones, and we make our trading decisions accordingly. So then that's kind of what I want to point out right there. But yeah, I'm going to pass the mic back over to Melvin.
Yeah. So then, yeah, pretty much this is what we're looking for right now, a possible bearish signal, and we may get it and we may not get it. But just like I said, our key The key to trading is not to force anything to happen, but to have if-then scenarios. Like if something doesn't work out the way we're planning it to work out, then that's okay. We're not going to be impulsive and just enter a trade just for the sake of entering it. We need to wait for confirmation. We need to wait for certain clues and signals to take place before we do anything. And if it doesn't happen, then we'll wait for the next trading opportunity, the next scenario. That's why it's important to have a trading plan. You know, it's important to plan for, you know, different trading scenarios. Like if this doesn't happen, then this is what I would look for. You know, most professional traders do that because we're not like a genie. We don't have a crystal ball and we don't know what's going to happen in the market. The best thing we could do is just respond to what price is doing at the moment. So then in this case, what we're going to do is just respond. We're just going to wait and see how, of course, everything responds around this key level or zone of confluence where price is right now, and see what happens. But that's pretty much it in the most part, in a nutshell. Seems like the stochastic is still, it may push a little bit higher, you know, to get to true overbought territory, but you know, we'll see. You know, only time will tell. But this is with the Euro USD. This is our outlook. Now, if price does push higher, which I think it could possibly break this descending trendline resistance, to be honest with you.
On dollar weakness.
Yeah, on dollar weakness. And I might as well do this right now. I wasn't really gonna go here, but I can pretty much share that with you, because if you look at the Dixie, let's just go to the Dixie right quick. I wasn't going to really talk about this, but I might as well briefly. But as you can see right now, we're on the Dixie, and we're looking at the daily chart right now. You can see that price is trapped within this daily ascending channel, but it's testing channel support right here. But if you go to a smaller time frame, well, for one, let me just go to a smaller time frame, like the 4 hour. You can still see that price is still respecting this descending trend line resistance right here. And you know, which means that we could see, unless this trend line is broken to the upside, we could still see the dollar weaken and push past this support right here. So then, you know, that's something for us to be mindful of when trading dollar denominated pairs and even some of your dollar base pairs.
Yeah. Yeah, I wanted to point out, I don't know if you guys have seen that, and some of you guys already know this that have been with us for some time, but you can see here how even with the Dixie, you can see over the long term that has been trading within sort of like a channel. This channel has been going to the upside. However, on Euro USD, the currency pair that we was at before, we saw this trend channel to the downside. So then that's just something to be mindful of, because really the Dixie is about 56%. You know, I always get those numbers confused, but it's about 50% weighted in euros. Euro is the most heaviest currency that's within that particular basket of currencies within the Dixie. So then, of course, you will see sort of like an inverse type of relationship, an inverse correlation between the Dixie and the Euro US dollar currency pair. Yeah. So then you can see here how the Dixie is testing this ascending trend line support of this channel right here, and we saw on the Euro USD testing the descending trend line resistance of its particular channel. So then I just kind of wanted to you know, for you guys to know that. But yeah, this is our Dixie chart. At the moment, we continue to see dollar weakness, and it's testing this area, this technical zone right here, and there's a possibility we may see, you know, a turn. And if we see that structural turn, then that can also serve as a harbinger of further dollar gains, or we can see it break below this resistance, this support right here, and tumble lower and slide lower and soften for the remainder of the week.
Yeah. And as long as price is maintained below this descending trend line resistance that we see on this 4 hour chart, then we can expect, you know, still to be short the dollar. So then that's the reason why I say that my bias is still in some way slightly in favor of shorting or selling the US dollar, which means buying Euro USD. So, you know, you'll short the dollar. Yeah, for those that do not know, the Dixie stands for the US dollar index. So then as long as price is still sliding lower, and it's maintained below this descending trendline resistance, then we want to look for opportunities to buy the Euro USD on corrections until we see signs otherwise. However, got to be mindful of the fact that we're in this zone of support and confluence and all that stuff. So you never know what can happen. The best playbook to have is to really be cautious and just wait and see what happens. Either we're going to get a break to the downside on the dollar, or we're going to see a break to the upside. So we'll see. But are there any questions about the Euro USD, the Dixie, or any of the stuff that we just mentioned on this presentation?
Yeah. I guess what we can say is that you really right now we're in wait and see mode.
Yeah.
We don't have any particular trade that's getting ready to set up real shortly or quickly. We're just waiting for technical clues around these key levels of resistance or support, and we're waiting for that sign or that sort of like that signal to let us know what's actually taking place within this particular instrument. But yeah, we'll keep you guys posted. For those of you guys that are in the trade signaling room, we'll let you guys know when we do see an opportunity forming in this particular pair. But if we don't have any questions for Euro USD, then we can continue on to our next currency pair.
Yeah, which is the US dollar Japanese yen. So then what we want to do is go there now, the US dollar Japanese yen. Okay. So all right. So then right now we're looking at the US dollar Japanese yen, and you know, this is also one of our favorite pairs, even though lately it's been kind of interesting trading it. But as you guys know, we saw price rally and correct higher, and it pushed past this area that we was identifying before, right around here at 110.80. It pushed past this zone, and it tested this zone of structure right here, which we identified before. Because this push higher, I know we see this blue arrow right here. This push higher right here is a result of something that we call a 236 measured move. For those who are premium members, or you know, members of our private trading community, they would know exactly what that means. But for the most part, the market has been moving symmetrically and harmonically. Where we've had impulse move, correction, equal measured impulse move, correction, equal measured move, you know, consolidation, and then we had this 236 measured move right into this zone of structure resistance right here. You could look left and you could see that what was once support right here with these wicks, it was support right here, has now functioned as resistance. And what we see right now is price potentially forming, you know, a possible double top. You know, we see price push up, test this region, fell back, found support right here, or dynamic support at the 20-day moving average, pushed up higher again, and then now is pushing lower. So then, you know, we saw we're seeing what appears to be a potential double top on the daily chart. And also, if you look at your stochastics, for those that do rely strongly on their indicators, you know, we're also seeing a bout of bearish divergence as well. You know, I can't go into all the details of what divergence is or bearish divergence, but we are seeing this bearish divergence, you know, on the slow stochastics. In other words, what bearish divergence is that when price is trending upwards, like in this case, it's still trending upwards, we're seeing momentum start trending downwards, or these momentum cycles of the stochastic starts pushing downward or sloping downwards, where you can draw a line between the consecutive highs. It's leaning to the downside. So then whenever you see that, then you know that momentum is shifting and that we could see a fall or dip in price. And that's exactly what we're seeing right now on the US dollar Japanese yen. But what we're going to do right now is drop down to a smaller time frame. So yeah, let me do that right now. Okay, so then we're going to drop down to a smaller time frame. I could get rid of this line right here because I don't really need it. Okay, so then we can drop down to a smaller time frame. Let's drop down to the hour. Yep. And actually there was a sell opportunity we could have took advantage of, but you know, on I believe it was Sunday evening my time or Sunday night, but I was tied into I was tied in with another position on a euro. I had a pretty decent sized position, but for the most part, there was an opportunity to enter a trade right around here and take this slide lower. However, right now we're looking at price, and we're going to see if we can find another opportunity to enter short on this pair. But what I want to do is first draw in what I see. So then if we zoom in, or we pay attention to price, we can see that price is respecting this ascending trend line support. Oops. Let me change the color. So we see that price at the moment fell and is currently testing this ascending trend line support, and it's creating almost like a double bottom, possible double bottom on the 1 hour chart. So then we're going to really pay attention and see what happens with this pair. You know, I'm thinking we could get a push higher and another retest, but if this ascending trend line support holds, then you never know. This could be still, you know, bullish for the US dollar Japanese yen. We could see a bullish rotation, and we would know for certain what type of move we would get if we see a break and close above this zone right here. Let me just draw it in right now. We have this zone where price is sort of moving in congestion, almost like a cluster box right here. And then we had this head and shoulders right here, but this zone right here, let me just draw it in. If price is able to break above this zone right here, then I may be cautious on selling. That's what I'm going to say. For now, I may be cautious on selling. Now, if price breaks above these highs right here, then I definitely want to, you know, continue having a bullish bias for the US dollar Japanese yen. So then here's how I'm going to play it, or here's how I would like to see it. I'm going to be pretty cautious on this pair until I see price break this ascending trendline support. If I see a nice clean break below this ascending trendline support, then that's when I would look for price to retrace and look for an opportunity to sell upon, you know, upon bearish confirmation. But we may get something like this where we see price push up into this zone, and then once it does that, we may see price fall lower, break this ascending trend line support, and then that's when I will look for an opportunity to sell on a correction in price. So then I wait for price to retrace and test this ascending trend line support, because what was once support will now function as resistance if this does happen, and then I will look to sell upon bearish confirmation. You know, that's what I would do. Price could do something like that, or we may see price push higher. And if price does push higher and test this zone, then what I would do is look for some sort of stronger bearish confirmation before I even enter a short, because we may be seeing a reversal in price take place. I may just sit on the sidelines if you do get that type of retracement, but if price does break through this zone, then I'm definitely looking for an opportunity to buy on a dip in price.
Yeah, I was going to add, with the US dollar Japanese yen, it can kind of be pretty, you know, tricky, because you really have to follow risk sentiment. But also, even on top of that, it's also important to know that there's a strong correlation with US Treasury yields as well. And even the Nikkei, and even, you know, U.S. equities like the Dow.
Yeah, the S&P 500 especially.
Yeah,
it's closely correlated with the S&P 500.
So then, even when trading, is, you know, what could be a good rule or good idea is to look at those particular asset classes or instruments, and just to get an idea of what could be forming, or what particular dollar bias is there for U.S. dollar Japanese yen. Now, what I want to do, what I would like to do, I would like to go to the U.S. 10-year Treasury yield right quick. Because often, if we do see a pickup in U.S. 10-year Treasury yields, that will help to prop up and support the U.S. dollar versus Japanese yen. So then right now, just actually recently, we saw this break up in the US 10-year Treasury yield, which is really indicative of some dollar demand. We may see some dollar demand pick up, and that may be the reason why we're seeing this bottoming pattern forming on the US dollar versus Japanese yen. It could be also supported not only technically by that, that technical support that we saw, that ascending trend line support, but it's also being lifted by what we see in US Treasury yields, that there's some demand there. So then that can help you in trying to figure out, should you go long or should you buy. And but then you don't want to trade primarily off of your intermarket analysis as well. You want to look for key technical signs or clues that that particular pair, US dollar Japanese yen, could be rotating higher, and it still could be maintaining a bias to become bullish. But yeah, for today, there's improving risk sentiment. Of course, earlier there were some looming concerns, regarding Brexit. But for today, for this trading session, we've been seeing, a slew of economic data that's supporting a little bit of risk appetite. So then we may see a pop up in demand. But let's go to our economic calendar here. This is actually Forex Anatomy. Let me just close this right here or minimize it. But this is Forex Anatomy right here. And this is the economic calendar that we have on the site for all our premium members. And let's see what came out today. We had some employment data come out of the UK, which actually performed to the upside. It outperformed its expectation and provided some level of risk appetite, especially when you consider the past few weeks that we've been seeing, concerns over Brexit, and how just recently they threw down their third meaningful vote over the Brexit, whether or not they was going to agree with Prime Minister May's plan or adjusted plan. But then we saw for today, we saw the Claremont count change grew to 27,000 for the month of February. So that was really good job growth in a jobs number in the UK. But if we go down, we've been seeing slightly good numbers for the Eurozone. We saw the economic zoo numbers, the zoo economic sentiment index, come in better than expected as well. So then on the US dollar side, which actually I'm thinking, should these numbers have come out, or well, I think they may come out in a little bit. Yeah, but there's not much on the economic docket for the US dollar other than the Red Book year over year, Red Book data, which really has a low priority, but also factory orders, excluding transportation, which should be coming out. But there's really not much on the US docket. We do have factory orders, the month-to-month figure coming out, and we're expected to see it improve by 0.3%. But which would be better than the previous value from the previous month reading. But we have to wait for that data to come out. But for today, there's a little bit of relief in the market, and there's a little bit of risk appetite leading into some key announcements later on in the week. But yeah, that's pretty much what I wanted to share.
Yeah. So then, as far as the US dollar Japanese yen goes, right now we're still in wait and see mode. And if price does break and close below this ascending trend line support, then we want to look for an opportunity to short this pair on a retracement in price. However, we may get a continuation of that push higher, just like what we saw with the US 10-year Treasury yields. We may see a slide to the upside, and if that is, or a push or a pop to the upside, and if that is the case, then we want to be extra cautious when it comes to selling. Now, if it breaks above this zone, then it doesn't mean that we won't sell. It's just that we'll wait for more confirmation before we even have a bearish bias, or before we look for an opportunity to sell. And if we do see that sell opportunity come around this zone right here, then what we'll do is trade it down to these lows. I mean, we won't look for extended targets beyond this ascending trend line support, because you never know, this ascending trend line support could be maintained or respected. So we'll see. But if price does break and close higher above this high right here in this zone of structure resistance, then we may definitely want to shift our bias and become a bit bullish on the US dollar Japanese yen. So that's pretty much it, guys. I don't really have too much to share with you guys on today or on this morning. Are there any questions about the US dollar Japanese yen before we move forward? Before we talk about anything else? Okay. So then let me ask you guys a question. Is there any question about trading in general that you guys may have? Anything trading related? Anything about the Forex market? Anything that you may want us to touch on? If not, then we can definitely close out. But if there is a question, then we can definitely take some time to answer that question, because we really want to help you guys, especially those members who are not a part of our premium group. We want to really put them on the right path. It's not saying that you're going to learn everything that we teach and that we know, but at least we can put you on the right path and show you the right perspective to have when it comes to trading. Now, speaking of perspective, like, let me just talk about this a little bit. I believe a lot of traders have the wrong ideas of trading, or they just have the wrong expectations. They've been taught wrong, or the images that has been placed before them has sort of fantasized this lifestyle of trading, making it seem as if when you trade, you can get rich really, really, really fast, and you can drive these nice cars like every other trader does, and blah blah blah. I mean, they can have these false expectations, and I get it, because what we see online is stuff that that stuff is thrown in our face. You go to any social media post, go to Instagram, you see these quote unquote wannabe professional traders. A lot of them aren't. A lot of them are fakes. They go around, they flash all this fake cash, and then they have these nice cars they rent, and they make it appear as if they're living the FX lifestyle. And some people do. There are traders that do make a lot of money trading the markets. However, if you can get to a point where you can just pay the bills and make some decent money, then that's good. And really, trading can be a tool where you can really, it could substitute your job. That's all I'm saying. But it can get to a point, if you really grow and compound your account, it could get to a point where you do make a lot of money. But it takes sweat, blood, and tears to get there. It's not an easy road to get there. But our goal is to put you guys on the right path, so you guys can make a decision on what you want to do with your life. So then, speaking of that, we can introduce our private lab trading community. And guys, I don't want to keep introducing this, every single day, but of course, this is our private trading community. You can join for $1 if you want to, but we have different sections that you can learn from, and we got our monthly training videos, we got our potential trading setups, our webinar recordings are right here, and our weekly outlooks. And really, this is the section. This is the section you really want to pay attention to. And then right after that, we have resources and community forum and such. But you can join if you want to for $1, and take advantage of that opportunity to take your education to the next level. But with that said, I don't really have too much to share with you guys. I just wanted to do that shameless plug, just for those who may be interested. But I guess there aren't any questions. I guess we don't have any questions, so then we can call it a day. But thank you guys so much for coming to today's live Technical Tuesday session. We really do appreciate you guys, and we hope this was really beneficial. If you do like what you see and you like the information, we want you guys to share this video, especially when we upload it. Share it, like it, comment on it. Just give us some feedback on some stuff you may want us to talk about as well, because we can talk about other stuff apart from what we mentioned in these Technical Tuesday sessions. We could do other videos that may give you some level of insight on trading in general, and we can add that to our particular channel on YouTube. But please like, please share, please comment on the video, and let us know that you guys are getting some benefit from watching these particular videos. But we really do appreciate you guys. Thanks, Gary, for coming. Thanks, Brandon. Thanks, Marie. Those are longtime members of Forex Anatomy. But we really appreciate everyone. Not only our premium members, but also our free members as well. You know, we really want you guys to know how to trade the right way. And our job is to really, correct, and just pretty much share the honest truth about trading and really teach you guys how to do it the right way. And it's not saying that we have the only way to trade, that the way we trade, Melvin and Marvin, is the only way you should be trading. It's not saying that, because there's many different ways to trade. However, what we can do is give you the tools that you would need to really learn how to navigate the muddy waters of trading. So that's it. I'm not going to take it too much further. Thank you guys so much for coming. And until we see you again, have a wonderful week of trading. And we'll definitely talk to you guys next week on our next Technical Tuesday session. Stay blessed. Stay encouraged. And we'll see you guys soon. All right. Talk to you guys later. All right. Okay, then bye.